Owning a home is a big dream for many. It represents stability, freedom, and a place to call your own. But navigating the world of real estate and financing can seem daunting, especially for first-time buyers. One of the most crucial decisions you'll make is choosing the right mortgage. This choice will significantly impact your financial journey for years to come. Buying a home is a big step. It's exciting and maybe a little scary. You're about to make the biggest purchase of your life. Before you jump in, let's talk about how to pay for it. That's where a mortgage comes in. Don't let the fancy words scare you. A mortgage is simply a loan that helps you buy a house. You borrow money from a lender like a bank. Then, you pay back the loan over time, usually 15 or 30 years. It's like renting, but you're paying down your own loan and building equity. Equity means you own more of your home over time. A mortgage is a loan specifically designed for purchasing a property. Here's how it works. You borrow money from a lender, and in return, you agree to make regular payments over a set period, usually 15 or 30 years. These payments consist of principal, the original loan amount, and interest, which is the lender's fee for lending you the money. Mortgages come in various forms, each with its terms and conditions. Understanding these differences is vital to choose a mortgage that aligns with your financial situation and goals. Let's talk about two main types of mortgages: fixed rate and adjustable rate. With a fixed-rate mortgage, your interest rate stays the same for the entire life of the loan. This means your monthly payments are predictable, which helps you budget. Now, with an adjustable-rate mortgage, or ARM, the interest rate can change over time. This means your monthly payments can go up or down. ARMs might start with a lower rate than fixed-rate mortgages, but that rate can change after a few years. A fixed-rate mortgage offers stability and predictability. Your interest rate remains constant throughout the loan term, ensuring consistent monthly payments. This is an excellent option for those who value budgeting certainty and plan to stay in their homes for an extended period. On the other hand, an adjustable-rate mortgage, or ARM, comes with a variable interest rate that can fluctuate over time. ARMs initially offer lower interest rates than fixed-rate mortgages, making them appealing to buyers looking for lower initial payments. However, it's essential to remember that ARM interest rates can increase after a set period, potentially leading to higher monthly payments. Now, let's talk about some special loan programs designed to help certain borrowers. We've got FHA loans, Virginia loans, and USDA loans. FHA loans are insured by the Federal Housing Administration. They're great for first-time home buyers because they often require lower down payments and credit scores. Section 4, Government-Backed Mortgages, FHA, Virginia, and USDA loans. In addition to conventional mortgages, government-backed loans like FHA, Virginia, and USDA loans provide alternative financing options. FHA loans, insured by the Federal Housing Administration, require lower down payments and credit scores, making them accessible to first-time buyers. VA loans, guaranteed by the Department of Veterans Affairs, offer favorable terms to eligible veterans, active duty military personnel, and surviving spouses. These loans often don't require a down payment and have competitive interest rates. USDA loans, backed by the United States Department of Agriculture, cater to rural homebuyers. They provide low interest rates and zero down payment options, promoting homeownership in designated rural areas. Section 5. Choosing the right mortgage. A guide for your future. Choosing the best mortgage depends on your financial situation, risk tolerance, and long-term goals. Carefully consider factors like your down payment amount, credit score, debt-to-income ratio, and how long you plan to live in the home. It's always best to shop around and compare different lenders to find the best interest rates and terms. Don't be afraid to ask questions and negotiate to secure the most favorable deal. Remember, buying a home is a significant financial decision. Take your time, do your research, and choose a mortgage that sets you up for financial success.